All righty, welcome. It is January 5th, 2024, and the first week of the new year. And goal of this session, we'll give you guys some opportunities if you want to ask some questions in chat. You can certainly do so. I'm going to first really run through daily review of the portfolio, how I'm looking at it. I know there's a couple trades I already want to make in there, so I'm just going to go through again my thought process on daily monitoring of your portfolio. And this stuff doesn't take long. It takes me longer when I'm showing it to you than it does for me overall. And what I'm going to first do is I'm going to review the trading plan. So let's go here. Let me share the screen. And we're going to jump into the trading plan. In fact, I'm going to actually change this to today. So a new revision today. I think what I'll do is I'll just put a link to this thing. And if I change it, you can watch it. But no goals have changed, nothing management-wise in here. Trade rules haven't changed. But what I want to do is focus on this little section here, which is daily portfolio management. And I think I added a few things to this morning because I wanted to make this a little easier for you to understand. And I get it that some of you as a whole, understand what you're doing and are pretty free-flowing on this, especially those of you that have been members here for quite a while. You probably, they've got their own trade plans, they've got their own way of doing things. Those of you that are newer, and me, I mean, I don't care that, I've been trading for over 35 years now. I don't care if you've been trading for 35 years or 35 days. I personally need structure for my trading, and I personally, I need rules. I need trade plan. It makes me more effective. And I've putting the finishing touches on a trading psychology ebook, which we started to touch on already in this service, and I will finish it for you guys, and we'll give you the book that I put together, and hopefully it'll help you too. And it's got some examples from my trading years in there as well, at least some general examples so you can see why. But there's really two things I think that separates really, really good traders, in my opinion, from everybody else. The first one's discipline. And it's having the discipline out there to follow a plan, adhere to your trade rules, okay? All of those things. So, having the discipline to follow your plan no matter what, okay, and be able to do that. The other one is patience, and patience of, number one, waiting for the right setup. Number two, patience in letting your trades play out to the rules or the structure that you've set. So patience, some of you get impatient because, okay, I put on a trade and it's a loser in the first week. And I don't mean a loss. I mean, it's losing in the first week. It's down 5%. I think there's a new 112 that we put on. Oh, I actually don't have a loser in there. Let me see. I know I can find a losing trade somewhere. I'm actually struggling to find it. It's a good thing. I'm not trying to be cocky. I'm just telling you I'm struggling to find an actual losing trade. I knew we had one somewhere, but I think with the market moving up, we no longer have anything that's a loser. But there are some trades that may be down slightly in the first couple of weeks, first month or so. And you know what? It's all good. You've got to have the patience and the discipline to let your trade plan play out. And for me, there's I think the main difference between how Igor trades and how I trade is, and we've both been trading a long time. I mean, I'm older, doesn't mean I have more experience than he does. He's been much more involved with much more advanced level trading than I have. Okay, but for me, I can't wing things. Okay, I can't just look at something and decide, you know what, yeah, today I'm just yanking that thing off. I used to trade that way, and it incurred a bunch of losses for me. Okay, when you don't have, in my opinion, if I don't have specific rules, I don't mean you, if I don't have specific rules, I make mistakes. Okay, and I'm an operations guy and I'm a numbers guy. It's how I run my businesses. That's how I've run consulting for companies. That's how I've been a turnaround guy for companies. I'm a rules guy, a structure guy, and an operations guy first. Okay, I'm not ever a fly by the seat of my pants type of thing. And even though I have experience in trading and I can look at some things and decide, that we want to do that, if I follow my rules, I'm in pretty good shape. I'm going to really keep myself out of serious trouble most of the time. So how does this all break down to daily portfolio management? Well, if we're going to look at our daily portfolio management, I do every night. We start with those nightly charts and stuff. So my daily reviews at night, okay, that is, it's not just for me to generate YouTube views or something like that. I mean, you don't make a ton of money as a YouTube person for the most part. Okay, that's not my goal. My goal is not to go make, I don't know, $1,000 a month or something like that as a YouTube post or something like that. I can make that same amount in a couple hours on a 0 DTE trade or within a couple days, as opposed to waiting a whole month and having to spend hours a night creating content. That blah, 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 blah. Okay. The whole reason I review charts and things like that is I'm setting up my plan for the next day. So I look at my charts, I review them. I'm looking at my watch lists. I'm looking at futures. Where are potential trade opportunities and ideas that I could put on tomorrow? Then I'm looking at my account. I'm looking at the daily theta, the daily delta, my buying power, realized gains, losses, those types of things. But I'm really looking to see, do I have opportunities to trade? How is my trading going? Is there something I should be looking out for? All of those things I think are important to you. But that nightly video, as much as people have gotten a lot out of it, I think, and there's a number of you here that have joined the service because of watching the videos, and that's awesome, that's great, and we certainly welcome you here. It's as much for me as it is for anybody else, because I'm not getting rich on YouTube. Okay, not getting rich on running a trading service. Okay, it's my trading is what's going to make money. Okay, and we're able to share it here, but that video lays out my daily structure. It's a routine. It's the same every single night. Okay, I review the charts, I review futures, okay? I throw in I look at a couple sectors, I get a sense of where the market is so that I know where I have a good feel for what's happening in the market. Okay, I'm not news driven. I don't care that there's a meeting or an OPEC meeting or something like that. Those are short events. I want to know where the market's trending overall and what areas are potentially good areas to invest in with my style of trading that I've developed. Okay, and then I look at my portfolio to see, am I able to trade, and put that on. So the next piece here is the daily portfolio review, and that's what I want to spend some time on here today. Is let's go through the portfolio review, and the first three things I look at, number one, are any of the naked puts at 95% need to be taken off of? I know of at least one. And then do we have any put debit spreads at 25% or bet more profit? And if so, should we adjust those? Can they be adjusted? Should they be adjusted? Is there anything in trouble? And when I mean trouble, I said, is something getting close to a 200% loss, a 2x stop? And because I trade futures and because I can't put stop losses on futures, which it's okay, even if I could, I still wouldn't, because you can get stopped out on a fat finger trade by some other guy in some other country that's doing something stupid. Okay. However, I feel, yes, there's going to be slippage. Do I always get out at 200%? No. Sometimes it's 197, sometimes it's 205, sometimes it's 220, 220%. I'm close. Okay. And I'm manually closing out of those. You know what? They're hitting my loss and I'm getting out. The key thing is, am I getting to my loss? Am I pretty consistent about that? Do I know my trades? Yes. Okay. And then I'm looking to see, is my BP still okay? Today, what's happened in the market today that has affected BP? And then I would add trades based on my particular strategies, looking at my allocations, my delta, my theta. What should I be adding? And then I would add those things to the tracking spreadsheet. So this area here of portfolio management, I added this to the newer guide this year, and I actually spelled it out a little bit more this morning. So I'll post a new version of this up for you guys as well. It's only got 3 bullet points additional. So it hasn't really a massive change to it. Okay, so there's my portfolio management. Let's look at the accounts now. All right, so I want to jump into my accounts and we're going to quickly start. I just start at the top and that's all I'm going to do in this account. Right, so let's start at the top. Let's jump into the account. Let's see what's going on. Number one, we got a couple different CL trades going on here. We're going to review these first. First one's a 112 here, and this put debit spread's now over 95%. What does the trade rules say I should do when I'm over 95%? It says I should close the naked put. Right, so I'm going to close this naked put here, and it's at 1 cent. I'd put it in a working order. I was trying to get 1. It's trying to close me at 2. If I change it to 2, I'll get closed. Done. All right, so that's done, and now I've removed that naked put. What I have left is a put debit spread that is not a winner. I just simply look at the P&L to open quickly, and I can see that that's not positive, so I don't have to do anything with the put debit spread. All right, then we look at this 112, 61% naked puts, okay, and not winning on the PDS yet. Still a good positive trade. We're up 80%, nothing to do. Okay, looking at this strangle's up 23%. There's nothing to do. Now, somebody brought this up, I think on a different trade maybe, but let's look at this strangle. So this strangle, now, this is not my trade rule. So this is where, if this is something you want to incorporate, do it. Because if your question to me is, well, should you close this thing? You're at 26% in 16 days. Okay. Typically, I'm looking for 50%, and it takes me 30, 40 days, somewhere in that time frame. Should I close early? Well, 25% in 16 days is a pretty good return on this. If I close now, I may not hit my my profit amount that I need for the month, but I could also be waiting a lot longer for this trade. It could also take a loss on this trade. So what would you do in here? Again, I think this is up to you. Okay. The P&L open column, you've been hunting it in settings here. When you go to your position detail, or I'm sorry, your header, was it the header position detail? Header detail on positions. Okay, sorry. So on positions here, I go to P&L open and P&L open change. Okay, so that's what this is. So I'm going to look at trade price, the current mark, here, the P&L for the day, the P&L since the open, the P&L since the open change, which is the percentage, days since open, capital requirements, beta weighted net delta. Okay, that's how I'm doing it on the position level here. That's how I get the P&L open change. Okay, so hopefully that helps. But I'm looking at the P&L open as much as anything. This strangle, no, the strangle is now only up 22%. I'm not going to close it yet. But I think I would not fault you for closing at 25%. But I'm at 23% right now. I'm going to wait a little bit longer on this particular trade. $570 is not bad, but I think we can do better. All right, so I'm going to let the working order for that strangle keep going. Now I have a 112 trade here, and this has only been on for 8 days. We're not profitable on well, we're profitable, but we're not at 95% on the naked puts. Now, this is a much higher naked put delta-wise than I've traded in the previous. It was more of an accident than anything else, but we're letting this trade run. This is a pretty, a little bit of a different 112, more of an accident, but I'll take it. But we're already up $1,000 on this particular trade in 8 days. Not too shabby, 22% though. Okay, I'm not ready to do anything here. So that was a quick review in there. So we've already closed a naked put trade. Let's go through ES. Now this FB112 will expire today. It'll expire worthless, nothing to deal with there. Okay, here's another FB112 trade. These are the 2 tiered ones. They're in the same expiration that I was experimenting with. I've already closed the naked puts on these 2 FB trades. So there's nothing to do here. And the put debit spreads are not winners, so I'm not worried about that. Here's another 112 trade. I actually was going to do a tiered version of this and probably confusing you with it. So let's just rename it. So I'll go back to group. I ungrouped it. I'll regroup. This is the January 19th 112. It's a standard 112, not a long-term 112. Okay, I was going to try a tiered approach to this one. I just didn't do it. All right. So this trade here, now my naked put is at 93%. It's close, but it's not there. So I'm going to let this thing just cook a little bit longer. My PDS is not winning so far, which is totally fine. Nothing to do there. All right. Then we have a long-term 112 here for January 19th. You can see the naked put's already gone. The put debit spread still is losing. Nothing to do there. This January 31st LT 112, the put debit spread's already been closed for 95% winner. The put debit spread here is losing, nothing to do there. I do have a 60 DTE hedge on, doing what it's supposed to do. It's only halfway through here. This is more of a large hedge. I'm going to be doing something different here, and I'll talk to you about it in a minute. But I'm leaving this hedge on. It gives me a really, really good hedge right now, and I don't mind I'm at a new all-time high. I don't mind the cost of this hedge. I got 28 more days on that. All right, here's the February 16th long-term 112. The naked puts are already gone. The put debit spread's on. It's not profitable, nothing to do. Okay. Here's a BA 112 trade. And on this BA 112, and I was tiering these as well. So these are both in the same expiration. This BA 112, the naked puts at 50%, and this one it's at 41%. So there's nothing to do. The put debit spreads are pretty much flat. So they're starting to give me a little bit of a profit, but it's certainly not at 25% profit here. So there's nothing to do. Quick glance tells me that, you know, these are not at a 25% profit. I'm down $6 on this one, and this one's up 130 bucks. Okay. How would I tell? Well, a quick way to tell is, oops, I don't know why I clicked off of that. This is a 50 wide. Okay. If it was 50 wide, all right, I'd want to get at least 12 bucks or so for closing this, right? Which is 25%. Well, right now it's only giving me 10 bucks to close it, so I wouldn't bother. I can see here when I look at the actual mark, the current pricing of this. And when I look at the current pricing, I can see it's a $10 difference on a 50 wide. Well, that's only 20%, so it's not 25%. I'm not going to do anything there. The long on the ED and the SPDS January 19. Okay, I don't close the longs here, Lewis, on this January 19th. I don't know which one you're referring to, but if you're referring to, I'm only looking at the short puts. Okay, I'm not closing the longs. Okay, I will never close the long PDS unless I'm closing the whole PDS or letting it expire. The shorts is where I would look to cut. And I'm going to come back to this one in a minute, but just because these are sitting here, at 98% doesn't mean this is not a profitable PDS. There's nothing to do. All right, so I am not going to do anything on a put debit spread unless, let's go back to the trading plan. Make sure I've got it showing. Okay, so let's go back to the trading plan here. I think you can all see this. And I'm going to run down, okay, through my strategies, and I'm going to look to the management of the put debit spread. Okay, so when would I close the PDS? Number one, I can wait to close till expiration. Okay, so if it's a near full profit, okay, I'm going to let it go, or I'll close it at expiration if I'm close to the full profit. Once the short put here is at 95%, close that contract and leave the long up. And again, it's an option. It's an or. I can I can close the short put at 95%. And I'm going to come back to that. So maybe, Lewis, maybe that's what you're referring to. And then again, if it's profitable early, we can look to capture at least 25% of the trap profit by rolling most likely the short put up or the long put down, but the short put up would be my by 50% or so of the width to capture that. So I won't make any adjustments to the size of the trap or close pieces of the trap if I'm not capturing at least 25% of the trap profit. And on a 50 wide, 25% of that would mean I would be able to close it for $12.50, right? So, because that's 25% of the 50 wide is $12.50, okay? Because of the max profit that I'm able to generate out of it. I don't know if that makes sense. PDS rules assume that the naked puts have been closed. Not necessarily. Okay, doesn't say either. It doesn't say you can't. Okay, if you go up here, we will manage the naked puts and PDS as two separate trades. What happens to the PDS is not predicated on anything that you do with the naked puts, and what happens to the naked puts is not predicated on anything you do with the PDS. To me, they're two separate trades. Okay, and I don't care what one's doing. In fact, there was go back to okay. If you remember from a couple of days ago, I don't think it was yesterday. Yeah, it was yesterday. So this oil trade here, you can see this one for 3 cents that I closed. You can see this 4. So the third one down here, because I can't highlight it on here. The third one down that I closed yesterday, okay, was 4 contracts. Okay, that was just the naked puts. The PDS had already been closed for a winner. Okay, so the PDS on this CL or oil 112, the PDS had already been closed for a winner a while back, a couple weeks ago. Okay, when oil dropped, I closed the PDS for a winner, but I let the naked put continue to go until I got to that 95% range, which happened yesterday. Then I closed it. So they're mutually exclusive. Okay, you don't have to close the PDS first or second, or the naked puts first or second. Doesn't matter. Look at them separately because that's what I'm doing in my review. Okay, so if I would close a winning PDS, fine. I would just leave the naked put on until I get to a 95% profit. Then I'll close it. That's my plan, and I don't care which one happens first. Right. So hopefully that makes sense. Let's keep cranking down here. Okay. On naked puts, and I just follow my rules on the naked puts. And the naked put rules are close at 95% profit. Okay. Or if the naked puts at 50% profit or more, I could look to close it early depending on where I am in the trade. Right. So let's go to here. All right. This one's at 50% profit in 22 days. So the question here would be, can you close this naked put early? So in order to figure that out, okay, I would take the profit on closing this naked put minus the initial cost of the PDS to determine the profit on the trade. So if I closed this position today at 220, okay, what's that going to generate for me? Not a whole lot of anything. Okay, 220 bucks. All right, so I would get 220 bucks by closing this naked put early. Okay, now this is a BA 112. It's not the same, right? It's not going to cover the cost of this $8 put debit spread, so I'm not going to do it at this time. Okay, again, follow the rules. Okay, I'm only going to close early if I can still make a profit on the overall trade. Maybe we'll find another better, easier example somewhere. Here's a good example. So this one's at 90%. If I close this today, all right. So if I close this one today, I'm going to generate what, 280 bucks on this one. Okay, is that right? No, if I closed it today, I should generate $2,600 in cash. So I should generate roughly $2,600 again. I don't know why. Did I miss something here? Oh, I know why. Because I already collected the profit. 2,620 bucks. Sorry, I looked at the wrong thing. But 2,600 bucks to close this one early. Subtract the put debit spread and determine if that return on that APR return is greater than my original 6% or 3% a month or so. If it is, that's fine. So let's figure that out. So $2,600 is what I would take in. It's over 50%. I could close that. And then this is the February 29 long-term 112. Okay, the put debit spread cost me 775 bucks. Okay, to put on. So 2,600 minus 775 is going to be 1,825. 1,825 on this trade would be my total return. I spent $11,700 what it cost me in buying power. Okay, so it's about a 15.5% total return on it, divided by the amount of time. I know I probably lost all of you in this, but I'm 64 days in trade. So I could probably close this one out as well and close it early if you wanted to. I don't really have a need for that on it, but just follow the trade plan and figure it out. I mean, can you close early? Now that I'm at 90%, I'm not going to close. But if you're at 50, 60%, like this one's at 80% winner, okay? This is probably another likely one that you could close. You can close it early. You're probably in decent shape to do that because it's only been 53 days and you're generating almost 80% of this. And even taking into effect the cost of this for $7.50, okay, which would be 750 bucks off of that. And in 53 days versus 120, it's probably close to worthwhile to do that. Okay. Why not just set the GTC for 95% when I put it on? I could. I just don't. Because the only thing I'm just looking at these daily, and I know where I am. But you certainly could. There's no reason that I can't just go ahead and put this on and put a good 95% on it. Absolutely, and I think probably a good number of you guys probably do that. Okay, so as soon as you put on a trade, just like I do with the strangles, I do it with the strangles. I just don't do it with the 112s because there are other factors that may come in, get involved in it, but. I think you get the point. So I'm taking a long time going through this. Nothing to do here, most likely. I'm not going to touch it right now anyway. And then my put debit spread here is at a loser. So there's nothing to do on ES right now. If I look at these, nothing to do here. Put debit spread still is a loser. The naked puts not winning to the amount I want right now. Now, this is an interesting one, though. Again, you are up 60% on this trade in 38 days. So that's a pretty good 1/3 of the total time of the trade. I'm already up 60% on the naked put. You could probably run this through the calculator and see if this works, but I would make 1,765 bucks minus the cost of my put debit spread that I have to still pay for, which in this case was like $8. Okay, so 1,765 minus 800 is going to net me $965 on roughly $11,000 in buying power, which is an 8.7% return in 38 days. Okay, and that is, a 0.23 overall return. The original trade was 2,100 divided by 11,000. was 0.16%. So again, you can certainly close this early. So I think it's certainly doable to close it early. I won't close anything early unless I'm at least at 50% on the naked puts. I think you can do that and then drop something else on and start to add more trades, which will increase your profit. So I think you can start to consider closing things early once you hit 50%. Most of the time, the math will work out that once you've hit 50% on here, and if that 50% happens within the first half of the trade, right? So if I have 50% of my naked put and it happens in less than 50% of the time, which would be 60 DTE, okay, you could probably close this entire trade off and take the money and run. Okay, it's a possibility. My trade plan says it's or this, or this, or this. I'm leaving it on because I want a little bit more money, and I have some time. I don't need the cash right now. But if you're starting to fear a big, giant sell-off, or you start to see a massive event or something, and you can't sleep at night, then close it. I think you just have to be smart. So yeah, I paid for it when I opened, but I've got to be able to still pay for that by closing early. So I think as long as you're at least at probably 60% within the first 60 days, because you need to be able to close it for 50% plus the cost of your PDS. So that maybe that makes more sense to you. Is I have to cover this $800 from the PDS. So I'm going to take $800 off this. I'm only going to make $1,000 now, okay, on this trade. $1,000 on $11,000 in buying power for me would be a 9% move. Now, 9% in 38 days, pretty damn good. I'd close. Okay, I'm not going to close this one, but you could certainly close it. I hope this makes sense. I just want you thinking through these. Anyway, I'm not going to make any adjustments at this point in time, but you certainly could. Like this one's at 23% naked put in 21 days. That's not worth it. You got to be at least at 50%. This one, good possibility that I would close this early. If you asked me, could I or should I would say, yeah, you absolutely could close that trade early. Okay. And the only reason if I'm closing the whole trade, essentially, because I just need to make sure I can pay for the trap itself. So I need to be at enough money here to pay for the cost of my trap, and which I did initially out there. Anyway, all right, let's keep moving. Gold, 112 on gold, not at 95%, not winning on the PDS, nothing to do there. It's still a nice trade. Here on copper, not at 95%. Okay, not exactly winning down here, not doing too bad. Strangle, 24% or 22% in 9 days. Now, I think someone asked me about this one earlier. Would you close this early? I think you can. Okay, you're at 23% out of 50% is our goal, and we did it in 9 days versus 30. Okay, so we made 24%, 23% in 1/3 of the time that we were expecting. Absolutely, I think you could close this strangle. Okay, and we could redeploy that money and put it into something else. Strangles are really good buying power tools, but I think you could close this trade. I would not be opposed to closing this trade after 9 days of being up this much money. Okay, in fact, let's just do it just for the heck of it. Okay, let's walk the talk. And let's see. I'm not chasing, so we'll see what happens here. Do we close this thing or not? But I think you could certainly do that. I don't have a problem doing it. Yeah, I could add the cost column as well. The only my problem is on my screen here, the larger I make this, the more these little black squares start to appear. Because Tasty can't, my computer for some reason has struggled with Tasty. Everything else works fine. But yeah, I could do the cost column. On positions, let's do it here. Okay, so this would be the cost column, so you can see exactly what these things are costing you. All right, so you can see what it cost initially. I just know what it is for the most part, but there you go. So does that make sense? Yeah, yes, it's tasty. So yeah, it's not your computer's tasty. I know I hate these little black squares that I get on here that can't keep up. Anyway, so I'll leave the cost column on there. We'll just leave it. All right. I put in an order to close this strangle. Let's see what happens. Hey, 22% in 9 days. Who could be upset? All right. It's not me, it's you. Yeah. So, hey, who's upset? I mean, look, this is 531 bucks. This is going to give you 3 months of Income Navigator in the first 9 days that you've been a member here. Okay. So I just paid for 3 months of your service in 9 days. We'll let this thing go. I'm not going to chase right now. Maybe I'll chase later. If I want to free my buying power usage is in great shape, so I'm not really worried about it. All right, here's another 112 trade, 76%. I'm not going to do anything here, but you could probably close this. Okay, your put debit spread is not in too bad a shape. Okay, you can see, where we are when we put this on. Okay, what the cost of the put debit spread was. So you can see that this put debit spread cost me about 700 bucks. I'm making 1,400. I'm making 1,400 here. It's $1,000. Okay, plus this thing has decayed a bit now as well. So you could close this one, I'd say as well, but I'm not going to. We're going to leave this one on for now. And then NQ, which is actually one of my more favorite 112s. They're just big BP hogs, and if you want to do more of these, you got to have a decent sized account because you're talking $14,000, okay, for just 112 here, but it's pretty nice. So I do like these. I do know a trader who does this weekly. So I think one of his favorites is the NQ112. So if you have the buying power, you get really nice wide, 200 wide, and you can get pretty far away. Here, I mean, you're talking 1,400 and 14,600 at the bottom of the trap. Okay, that is from 572. That's 1,972 points away, which is 1672. Okay, this is 12% away from where we are right now. So we still have 12% that the market can sell off on it. So the return on capital on this would be about 7%. Okay, so 7% return on capital in 56 days for this trade. Okay, so when I put this NQ trade on, okay, it was going to net me 840 bucks. You can see the 840 here. So take your 840. Well, now it's 1,400. It was 1,100 when I started, but you can take that 840 divided by the 14,133. You're getting 6%. Okay, and that's exactly what we look for, right? 6%. So all of these, they're all the same. All of these trades give me 6%. Look at this one here, right? Well, this one's a little bit more because you get a little bit better buying power on it. But look at the LE one. So I'm making 1,120 bucks if I let this go all the way on $7,600 in current margin. This is 14% return on this trade, and the initial trade was 60 days. Okay, so the LE one here was actually more of a 10, almost 11% buying power. It's even higher now because the capital requirements have dropped on this from the initial. So the maintenance requirements. Okay. Am I concerned with the correlation between NQ and ES? Nah, not really not. I don't have a ton, of it on, and I'm pretty good with it. So I really don't have a problem. It's only one trade. It's not like I have a ton of these on. If I did, then maybe I'm a little over-correlated to tech stocks and the S&P and NASDAQ. I just have one trade on here, so I'm not really too worried about the correlation of it. And then Bill, I don't need to go through Bill. I did add more yesterday. Okay, you can see here though that my capital requirement on bill is now 41,000. You can't see it here because it blocks it out, but my portfolio value of this account is $402,000. So, okay, this is almost exactly 10%. So 10% of my buying power is being allocated to bill. But when I look up here at my BP usage, okay, I'm at 48% BP usage up in the upper right hand. So 48%. Well, 10% of that is in bill. So I'm really sitting at like 38% BP. We got lots of BP, and it's time to start to play, I think. So I think that's where, and so if I wanted to get some trades on, I could have closed a couple of these early, and maybe the strangle will still close here. I could close some other things here. I could take some of these. I could take this one off. Now it's 64 days. I'm at 91%. I mean, I can't get much more out of this thing than I'm already getting. Would probably be okay to close that, free up more buying power, put on more trades. Okay. And I think this is what, this is where you want to start to work. My theta is down to 619. My theta is dropping like a rock right now. It's the lowest theta I've had in a long time. I got to get trades on. All right, so we got to get some trades on in this account. One thing I wanted to do before I move on. So first step when we were looking at the trading plan was, and it just took forever to do it, but normally this only takes you about 2 minutes to do. But the first step on this was reviewing any, do any naked puts have to come off? No. Okay. Yes, I took one off, right? I took one off in oil today. So I did take one naked put off so far. Okay. Any PDSs need to be closed? Well, right now, not really. And nothing is in trouble. There's nothing even at a loss. Well, I guess this, PDS is at a loss, but I mean, there's not even a single trade that's a losing trade right now in the account. So I don't even have anything to do. No, typically, do you close if you close the naked put early and it covers the PDS, are you closing the PDS too? No, I'm not. I like leaving these PDSs on to just be hedges. Okay, so I'm just going to leave it on to be a hedge. I already, technically paid for it, and at 95%, I'm paying for pretty much the whole thing. I just like hedges. Okay, so I like to leave these on, and I'm going to show you why. So let's get into everyone's favorite discussion before I put on some new trades. Hedging. I know you're all hedge-o-matics, and everybody here probably needs to get into Hedgers Anonymous or something here, because everybody's freaked out about hedging because you're watching too many videos of other people freaking out about hedging a portfolio. Okay, because they don't know what the heck they may be doing sometimes. Okay, or and I'm not saying don't. Okay, what I'm saying is don't freak out about it all the time. So what I want to talk about when it comes to hedging here is what's my potential loss for the most part. Okay, can we guess what that's going to be? There's a couple different ways to do that, but I'm going to show you my quick down and dirty way is if everything closed at a 2x loss. Now I know you'll say, oh, Tom, if it closes overnight and it blows past the 2x loss and you got to close, okay, you can't use that number. Yeah, I can. Okay, futures trade around the clock pretty much. I can probably close most things pretty close to a 2x loss. We don't even have a single trade losing right now. Okay. Oh, black swan. Okay. Knock yourselves out. Okay. What I'm looking at here is give me a sense. I just will sleep fine. Okay. What's my 2x loss potential? Well, what I did here was I took every single trade naked put that I have. So everything that's a BA112, FB112s, if I have naked puts still working, which I didn't have any there. Okay, here's a naked put, here's a naked put. Okay, naked put for you, naked put for you. Feel like Oprah, naked put for you. Everybody gets a naked put, naked put, naked put. Okay, but also this is CL, this is NQ, this is copper, this is oil, this is gold, this is live cattle. If the market crashes, is live cattle going to crash? at the same time? I don't know. But you know what? I'll play the game and I'm going to take that's a naked put. Okay, take this number. Okay, go to my long-term 112s. 3 of them have no naked puts left anyway. Okay. So nice. Appreciate it. Out there. See if we can remute you people. So naked puts here, naked put here, naked put here, naked put here, and naked put here. There's only 5 naked puts on long-term 112s. The other 3 trades have no naked puts. They're only put debit spreads now. Okay, they've all been closed. The naked puts are closed. All right, so I took all of those and I multiplied it by 2. Okay, and when I multiplied it by 2, I came up with $81,000. Right, so $81,000. If everything stops out at a 2x loss tomorrow, today, whatever, $81,000. So to me, and this was going to be a question I was going to put in the Discord, who can tell, you know, and we really don't know that what's going to trigger a 2x loss. Okay. Where does the market go to give you a 2x loss on something? Well, let's take a quick look. So let's go back. So remember 81,000, we'll go back to that. All right, and 81,000, let's just pick this one here. Right? And let's look at this naked put. Okay. All right, so in order to hit a 2x loss, where does the market have to go? Okay, so a 2x loss, remember this naked put's giving me 2,900. So in order for me to lose essentially $6,000 on this, where does the market have to go? Okay, so it's going to be, I mean, you can look at the P&L line or something here, but essentially, let's look at the expected, let's just use 39.40 or so. All right, so let's say the market has to drop to 39.40 today for us to lose that, according to, and I don't trust anything that Tasty has as far as a T+0 line. If we wanted to use just the actual trade itself, you'd be looking at about 37.50. So let's just use 3,800. All right, so 3,800 would be a 2x loss. Okay, 3,800 from 4,800. Okay, that's 1,000 points from here. Okay, divided by 4,800 is a 20% loss, right? Does everybody, does everybody understand that? So in order for this naked put to hit a 2x loss, okay, it's going to be somewhere in this 3,800-ish, 3,900-ish range, which is 1,000 points from here, which is essentially, again, yes, there's volatility is going to expand, Tom, and you're not taking into account volatility expand. I get it, okay? But even at 3,900 or even at 4,000, okay, at 4,000 here, if volatility expands, that's still an 800-point drop on a 4,800. Hey, do you notice we're exactly at 4,800 right now? Either that or Tastyworks is totally frozen. But 800 divided by 4,800 is a 17% loss. So let's assume in order to get there, and I can, okay, I can change my volatility on here as well. Okay, but let's just leave it alone and just give you a sense of 17% loss. And let's even go to 15%. Okay, so let's even assume it's even less, a 15% drop. The market has to drop 15% for this contract. It's not every contract. I get it. Okay, there's other contracts that are newer. This is an older contract. Okay, but if I was looking at a current contract here, well, what would that have to be on this one? I hope this is making sense for everybody. Okay, to get to a $6,000 loss on this one, I got to be over, close to 3,500. Okay, which is like a 25% loss. Okay, I picked a farther out contract, and yes, the T plus 0 line is not is not accurate. I get the per contract thing. I'm just giving you a quick sense. Okay, so I just want you guys to understand that I think it's going to take somewhere between a 15 and 20% drop in the market for me to stop out of most of these at a 2x loss. Now, the current ones here that are I've only been in it 64 days. Okay? At 64 days, I have to drop almost 30%. Okay, because this thing has changed so much. All right, so I hope that makes sense. So bottom line is, I estimate that a 15% drop in the market is probably going to get me close to stopping out. And if I stop out on everything, I'm worst case scenarioing, and I still don't think everything would stop out here, because some of these aren't even in ES. I'm just talking about, but it doesn't really matter. I would lose $81,000 tonight. Okay, so $81,000 on a $400,000 account, I'd lose 20% of my account. Okay, overnight. However, what you got to remember is how much is, what's your put debit spread going to be worth? Okay. And if you figure all of these put debit spreads in, and I started doing some back of the napkin math, and remember, I have a hedge. Okay. Let's look at this. I grabbed the wrong thing, but I'm going to clean this up. And where's my hedge? Okay, I'm going to look at my hedge first. Okay, got everything, blah, blah, blah. Okay, so here's my hedge. What did I say? We'd have to drop to about 4,000 or so, right? 15, 800 points down. If this thing drops, what is this hedge worth? Somewhere in the neighborhood of $30,000, right? Everybody with me on that? Okay. And because of that, this hedge alone is going to be worth about $30,000 for this one hedge. Okay. And that is just one put hedge. Then if you start to add up all of these 50 wides and 100 wides and stuff, let's just assume, I shouldn't assume, I'll tell you exactly what it was. I had 1, 2, 3, 4 of the FB and BA trades. Okay, some of those were 50 wide, one's 100 wide, and one's 140 wide. That right there, all of the FB and BA trades, put debit spreads alone, would give me somewhere in the neighborhood of $17,000. Okay, so I'm going to make $17,000 on all of the FB and BA trades. Remember, 17,000 plus the 30 on this 60 DTE hedge, okay, is somewhere in the neighborhood of $47,000 I will make on the put debit spreads and the hedge just from the BA and FB and hedge trade. Make sense? Yes, yes, hopefully. Okay, then I have my long-term 112 trades on, of which I have 8 of those at 50 wide, okay, times 2 contracts. Okay, so each of those is worth $5,000. Okay, if we land in the, if we go past the put debit spread, which most of these would be pretty close to at or past the short puts. Okay, so I'm assuming we'll get close to max value. Doesn't matter. I have 8 of those on with at 50 wide times 2 contracts. Now there is one here at 3 contracts as well. So one of the newer ones is actually at 3 contracts for the put debit spread, but all the rest of them are at 2. Okay, but just assume that 5,000 times the 8 long-term 112s on, what's 5,000 times 8? That's another 40,000. Okay, so right now I've got a hedge for 40,000. I've got the long-term 112 PDSs for 40,000. I've got the BA and FB as well. for another 17,000. Okay, so I'm somewhere in the neighborhood of $100,000 worth of hedge approximately. Okay, and you can see that a bit on here. Unfortunately, Tasty doesn't allow you to do the whole shebang here, but you can get a sense that if we did head down to this 4,000 mark here, okay, just these expirations alone are worth almost 35,000. Okay, if we get into this area, okay, and it could be worth who knows what. But if I lose 81, I'm going to have 40,000 in a hedge, or I'm sorry, 30,000 in a hedge, 40,000 in long-term 112 PDSs, and another 17,000 there. I'm over 80,000. I feel I'm hedged enough. Okay. Does it mean that it will work out perfect? No. Okay. Maybe I end up losing 20,000 of that overall instead of 80. Okay. Okay. If a black swan event or a big event happens, and we go down 15 to 20%, and if I think I'd be covered, but if I'm not, even if I lose 20,000, okay, I'm still only going to lose like 5% of my account, and I generate 3% a month. Okay, in 1 month, I will be pretty close to back up to where I was. In 2 months, I'll be at new all-time highs again. Okay, I'm just mitigating damage on it. So I hope this makes sense. Now, let's do one more thing here. We're going to wrap up. I want to show you that I think I'd like to try it. I don't know, but I think you can actually run an entire portfolio on just all the different versions of the 112 trade. Okay, I can eliminate strangles. I've only got 2 of them on anyway. I'm trying to close one right now, which just doesn't want to close. It's close. I don't know. Do you think yes, no, maybe? I don't know. What do you think? Should I kill it? And if I get stopped out on my naked puts, I'm going to close my stuff. So I'm going to close it all because I'm going to offset everything. Okay. So, I mean, we were going to close this thing early. All right. I don't know. Ooh, I thought for sure that would do it. Anyway, and we'll see if that closes. Let's go back here. All right. So one good way to hedge was I bought this 60 DTE hedge. Great. I spent $1,400 on that hedge. $1,450 on that hedge. Remember, I have a $400,000 account here. So I spent 0.3% on that, 0.36% in the 60 days. Okay, so it's costing me 0.18% a month. Okay, 0.18% a month. If I did this all year, I would reduce my overall by like 2%. Okay, so I would make, instead of 42% this year, I would have made 40% had I done that. And if you look at my trading dashboard piece too for last year, you'll see that hedges cost me like $9,000 there. So it cost me almost 10% of my gains were hedges. Would I buy another one? Yeah, I'll buy another one as soon as that thing expires, or if I end up using it, I'll buy another one. But I'm going to show you how, let's say I don't even want to trade strangles. I don't want to buy hedges. I don't want to do any of that. I want to run my life on 112 trades. Well, as you can see here, and as you guys can see in my trade plan, let's go back to the trade plan. Okay. If I go back to the trade plan, here's my long-term 112s. Okay, got my 8 running. I only have 2 strangles. Okay, here's all my other standard 112s in here on all kinds of different underlyings. Okay, I got one on ES, oil, live cattle, gold, oil, copper, another ES, NASDAQ, and oil again. Okay, so I've got, and I think we just closed an oil one today, so I got to take the naked puts off of. Okay, and then I have some other 112s that are in the spec trade area here. Okay, these are more spec trades for me, and then there's this one lonely little hedge in here. Okay, so everything right now, with the exception of 2 strangles, is a version of a 112. The BA and the FBs, those are just different hedges, okay? They're not perfect hedges, but they're pretty good hedges, and they're going to give me a pretty good payoff. The BA is just a longer hedge for a slower, longer downturn, okay? And then there's the FB, which is a big fat hedge, which is 100 wide, which is actually going to pay off if we move down. And you can see that most of these PDSs on these hedges are at 4,600, 4,600, 4,500, 4,400. Okay, they're pretty high up there. I mean, if we go down 10% in the market, I'm in all of these BA and FB trades. So those are hedging the account. Okay, so let's go back. Hopefully I didn't lose everybody here, but let's go back here and figure out if I didn't want to buy a hedge, that 60 DTE hedge, well, how can I actually do that without buying the hedge? Well, here's how you do it. Let's take a look at a long-term 112, and let's see. So let's look at this one here. This is a great example. So here's a long-term 112 for January 31. It's got 26 days left in this PDS. It is a losing PDS, which is they all are going to lose. Okay. The trading plan, the newer one, I talk about closing the short puts of the PDS also at 95% as a possibility. All right. This one will cost me $1.27. Okay. For a two contract hedge is going to cost me $127. Okay. So if I go to close this now, let's see if we can close it for, going to cost me $125, right? So I'm going to have a $125 debit. Let's see if we get it closed. We may or may not. You know what? Screw it. I want you to see how it works. So let's just do it. Bingo. All right. So now what I did was, that was the January 31st. So now I bought myself another, okay, essentially this is a hedge now, right? So the short put of the put debit spread's gone, leaving me this alone. Okay, this is at 40.50. It's lower than this here, but I only spent, okay, buying this hedge cost me $1,400. Buying this hedge, okay, really has only cost me, I've already paid for it with my naked puts. Okay, it really just cost me $130 for this hedge. Okay, it didn't cost me $66. It cost me $130 for this hedge. And let's look at this particular piece. Okay, I'm ignoring the fact that it's a loser up here because I technically already paid for it. Okay, but if we drop down here, I now have another pretty decent hedge for this. Okay, so if we drop down below 3,900, this hedge is going to start paying off for me down here, and depending on where you go, it can pay off pretty decently. All right, so you're giving yourself a hedge. Okay, do you have a rule for how many BA versus FB? I really don't. What I do is I'm aware of what my buying power is, and I get a sense of what that's going to look like. Here, I'd like to have a handful of these things running, but I think the best way to figure it out is what I just did before, which was what's my loss at 15% down? What's my loss if everything gets stopped at a 2x? Okay. If everything gets stopped at a 2x, the first thing you would do is subtract all your put debit spreads, okay, and see what remains on that account. Okay. And let's say in my case, it would have been not counting the BAs and FBs, that was worth like what, 30, almost 40,000. I think it was 5,000 times 8. So it was actually worth a little bit more than that. So almost $40,000 is covered by my put debit spreads of all of my losses. Okay. I didn't also add up all of the put debit spreads from all of the non-ES trades. When I did that, I believe that came to I don't know, that's like 10K or more. Okay, so when you subtract all your put debit spreads from your 2x losses on your naked puts, what are you left with? The rest of that you can start to figure out how many BA and FB trades. Do you like one or the other? I like to just spread it around and one BA, one FB. I like to put a little tier version on here and there, add some extra trades. Who knows? When the market's overbought, which means I'm above that 3 ATR line on the daily, okay, then I think I want to get more on. As we start to think back to the 21 EMA where we are now, I don't need to hedge as much. Doesn't mean there's, a black swan hedge isn't as big a deal, but I don't need to add maybe quite as much. So I hope this makes sense to you. All right. All right, let's get a quick trade or something on. I don't want to keep you guys, I got another meeting coming up, but we closed out a couple things here. When we turned a 112 trade into just a pure hedge only. Okay, so that's a nice hedge. All right there. So we have technically two black swan hedges. I mean, if you bought this right now at 26 days, the 40-50. 26 days, if I just bought this, two of those. Okay, this is what it would look like. Okay, so this is what it really should look like. So if I bought this for 145 bucks, which I just did today, right? I own this hedge. Okay, look where we go. As soon as we hit 4,000, we start making a couple grand here on this. I mean, we start making money really when we get to this 4,000 level, and then we really start to make up. I mean, you can make 100 grand, 50 grand, 30 grand. If we get down to 3,800 or so, we can make 15 grand. So you've given yourself a pretty nice hedge for 120 bucks. And I didn't have to buy hedges. All I had to do was close out a short 30 days. I already closed something I already paid for by closing the naked puts anyway. I just closed it. The short puts of a put debit spread with 26 days to go. I mean, can I do it with others? Sure, you can go do this one too. Okay, this one's over 95%. It's $2. It's 215 bucks. Go out. You want to close that one? Close that one too. Okay, it's going to give me another. Give me another hedge lower. So all of these things are going to start to work if you take these off. And I think I got 74 days to go for 200 bucks, 215 bucks. Steal, I think, a steal. Okay, yes, you can go buy that right now, or you just take it off of a trade you've already made. You're just reducing a little bit of your income. You are taking a little bit of a loss on that. It's all good. Okay, I'm just closing out these. And if we drop, then this long one may crank up. So anyway, I gotta stop talking about that. Let's get into something. Got an oil 112. I'd like to put on another oil 112. However, this one's only 8 days old. It's probably not enough. ES 112s. The last one I put on was on the 22nd. So I might be able to just do another ES 112. I got these put debit spread rolling off today. Okay. So maybe we could do some. Oh, I know what I want to do. Anyway, let's go here. Let's just put on a standard 112 trade. March 1st, 56 days. Figure it out if this works or not. Okay. I just have this problem with paying over $8. So I'm going to move these strikes down. I don't know why. I'm not saying don't. It's 25 delta. I get it. I just don't like to pay more than $8. I don't know why that is. But I'm going to move it down here. And normally on these 112s, okay, I'm just doing, I want to make, I want to take in $1,000. Okay, so in order to take in $1,000 when I'm trading this, let's go down to roughly the 5 deltas. Okay, so here's a 112 trade that I'm looking to put on right now. Okay, so here's the trade. All right, so $450 on $9,000. Okay, so $450 on $9,000 is going to be a 5%. It's not quite my 6%. Okay, but I know that I have to double the size because I want to get to $1,000 or so roughly on these. So 4,200, maybe 4,210, which is 955 divided by 18,002, still 5%. Probably jack this up a tad more. Okay, now I'm at $1,000 on 18. I'm going to just stick there. So it's 1,030 on 18,943. It's 5 point something percent. So it's almost my 3%. All right, so this is this is the trade that I want to get on right now. Might have to move that up just a fraction so that we take that money in. And this is good. So 42.25. Let's put these on first. And then the 42.25, 4 of those. Okay. Okay. Boom, done. All right, so here you go. We've got 925 was the naked puts times 4. Okay, I'm sorry, times 2 really. So that's what, 1850 minus the $8.10 put debit spread. It's 1040. Okay. Which is going to give me 520 times 2. That's 1,040. So they got that. I got that one working. We'll go up here. Boom, boom, boom. Group it. March 1, standard 112. Put it in there, and we'll leave that going. All right. So nothing to do there. Gold, I got a 112. Gold's always a tough one. My BP usage 56. I can go up to 60% because 10% of this is bill. Okay, so we got a little bit more room to put another trade on. You know, what do I like? I think I like, I definitely like oil. I really just like oil. I could trade only oil. I do like gold in here, which is hard to get these trades in gold. Work out. It's only 52 days. I don't love it. I don't know that I want to go to 80. I'm probably going to avoid gold for today. If we take a look at, really, I haven't gotten filled on this triangle. This is 18 days old in HG. Let's see, it's the same as gold, 52 days, 80. Not perfect for me. I could do another NQ1 and get that on, but I think what I want to do is bonds. Okay, so I talked about bonds. And when I look at the chart, bonds have pulled back to the 21 EMA. They've been dropping and been rolling over. I think bonds are not, I don't think they're going to zero. I think the rate cuts are in. I think bonds are going to have a tough time moving lower, but unless the Fed indicates we are going to raise rates. But we see if we can put a goal. 77 is not great either. Don't love it, but let's take a look. So if we want to put on a 112 here, 109 is not bad, but I don't think I'm going to make it here. All right, so we're taking in $109 on 2,800. I did this earlier today, okay, which is 3.8%. It's not going to get it done. There's a couple things we can do here. I have to get more money out of this trade. So there's a couple things we can do. We can move these down. Okay, so if we move this just farther away, which is fine, I don't really care because they don't really pay off much anyway. So I can move this lower. It's going to generate me a little bit more cash. So now I'm going to make $156 on 2780. Okay, so now I'm at 5.6. I'm at 6%. So this is a good one. I could have moved the naked put up as well. I think I'm going to leave it down here at 109. I think that's pretty safe. And if we get, I mean, that would be only 1 point off of the lows of the year or so. So I think this is a good trade. In here, this is what I would want to do. All right, and then I need to increase this up. We were making, sorry, let's go back. All right, so just again to reiterate, I was making 156 bucks. Well, remember, I gotta make $1,000 on this thing, so I'm gonna have to do about 12 contracts on this. Yeah, it's expensive. It's gonna cost me a little bit to get this one done. All right, so delete that. Let's put this on. Okay, you can see it's going to cost me some 40 some bucks to put this piece on. I love the blackout here, so you can't even see what you're doing in Tastyworks, but whatever. And then I need 12 of the 109s. Okay, and I wanted to get at least 10. Let's see if we can get 11. Yeah, I didn't think so. All right, 10 is probably going to be the key. Right there. So there's a 112 now. So we have this 112 trade working on ZB. Buying power is up to 60. So I'm right at my 50-point move. I'm just going to leave it here for now. Okay. So there's how I'm trading it. That's what I'm doing. Small account, you could potentially do like a TLT or something like that as well. I mean, you can do it in a small account. I mean, if you remember, I don't know how small of an account you're talking. But remember, only one contract of this cost $2,800 in buying power. So, and it was making 150 bucks. So in a small account, I think you could still do this. It's only taking up, $2,800 in a small account. If it's really small, you may want to find something else, maybe a TLT. And I don't know how it works. I hate doing these things on stocks or ETFs and stuff, but all right, I'm gonna have to roll in a minute. But we did the same type of thing here, just a basic setup. Okay. You don't make any money, but okay, so here's TLT, but you're only making what, $10, on this particular trade. So we really have to fuss this trade a bit just to make it work. See, this is why futures to me are just so much better. But you're still at 1895 to make 23. When I was doing ZB trade, I was making 150 bucks using 2,800. So I think in a small account, you can still use ZB in a small account. LE, I think there's a possibility of doing something there at some point too. I do like LE. I think you could do another 112 in here. The other thing about closing early is when you've got like bonds, LE, and some of these futures, it's expensive to close and to open and close the trade. So if you don't get closer to full profit, you're chewing up a lot of money in commissions as well. Okay, all right, this is enough. This is like an hour and a half of stuff. My voice is fried. I'm fried. You guys are probably all fried. Rick, hit the gear upper right, then the general tab, then under modules, chance. Then under what? Then general tab, under modules, change the zoom level. and change it back. All right. I will try that. We'll see how that works. So maybe maybe that's the key, because those black boxes drive me crazy. You can't see what you're trading half the time. Stupid platform. So, all right, that's enough for today. Hope this was helpful. How to review your portfolio, how I figure out some basic hedges, and how you could use 1-1-2 trades to do pretty much everything you ever wanted to do without adding hedges, strangles, or anything else. Now I got some trades here. I got to go catch up. So it'll be about an hour before I get these posted for you guys, because I got another meeting. So I will do the best I can. All right, let's get going. So maybe I can get on that now. All right, take care, everybody. Enjoy a great rest of your day. I hope this was helpful to you. Rock on. Make some money.